Okay, hi everybody. I'm back again about some of the things that I was trying to present to you on my earlier video with regard to bank fraud, mortgage fraud, and how you can protect yourself against it. I wanted to direct your attention to two videos that are already up on YouTube. One is the Zeitgeist Addendum. It's the second in a series of videos that present a great deal of information about financial workings, the inner financial workings of the Federal Reserve and Central Bank of the United States, their fraudulent activities, and it goes on to explain court cases and rulings where people were being illegally swindled out of their property by illegal foreclosure of banks trying to take the property back by making illegal clauses in their documentation, their promissory notes, and so on and so forth. A lot of that coming out of Zeitgeist is very, very informative. I'd like to direct your attention to it. Be a great viewing so you would understand how you can actually help yourself. Well, since there are so many people that are faced with potential foreclosure and actually have been foreclosed upon, you can actually get your properties back.
In 1969, there was a Minnesota court case involving a man named Jerome Daly, who was challenging the foreclosure of his home by the bank which provided the loan to purchase it. His argument was that the mortgage contract required both parties, being he and the bank, each put up a legitimate form of property for the exchange. In legal language, this is called consideration. Mr. Daly explained that the money was, in fact, not the property of the bank, for it was created out of nothing as soon as the loan agreement was signed. Remember what modern money mechanics stated about loans? What they do when they make loans is to accept promissory notes in exchange for credits. Reserves are unchanged by the loan transactions, but deposit credits constitute new additions to the total deposits of the banking system. In other words, the money doesn't come out of their existing assets. The bank is simply inventing it, putting up nothing of its own, except for a theoretical liability on paper. As the court case progressed, the bank's president, Mr. Morgan, took the stand, and in the judge's personal memorandum, he recalled that the plaintiff, bank's president, admitted that, in combination with the Federal Reserve Bank, did create the money and credit upon its books by bookkeeping entry. The money and credit first came into existence when they created it. Mr. Morgan admitted that no United States law or statute existed which gave him the right to do this. A lawful consideration must exist and be tendered to support the note. The jury found that there was no lawful consideration, and I agree. He also poetically added, "Only God can create something of value out of nothing."
Because the banks have no right on a variety of counts to collect that money from you. Another video that I'd like to direct your attention to is Changes on the Horizon is the name of it, and there are 3 parts to it. Basically, the third part has the most information directly related to fraudulent activities of the banks.
According to the Federal Land Bank's 1933 charter, they are not allowed to make loans directly to applicants, but instead could only back loans as a guarantor in case of default. Because the Federal Land Bank had violated this rule, the farmers' legal team was able to successfully sue the bank for damages. Word of the lawsuit began to spread. The legal team would teach others how to fight foreclosure and to help them file lawsuits as well. Celebrities, such as Willie Nelson, joined in the case and helped raise money during his Farm Aid concerts. Here's a short clip of Willie Nelson describing in his own words the series of events leading up to the farmers' claims legal case.
This whole thing started when agriculture collapsed.
He was saying that
the housing thing came second.
Tell us about it.
Well, you know, I've been in Farm Aid a long time, and I've been seeing 8 million family farmers leave the farm. And there was 8 million, and now there's less than 2 million, losing 300 to 500 a week. The reason they're going is because they're going out and taking the land back, and now they're taking the houses back that they sold. I mean, they told the farmer to plant, fence post to fence post. We'll take care of you, buddy. Loaned him more money than he can pay back, and then he wound up losing his farm.
Yep.
Same thing happened to the house owner. Loan him more money than he can pay back. Now, the next thing you know, the government's got all the land, all the money, and we just give the asshole billion more dollars.
The Baskerville case had now become the Farmer Claims class action lawsuit. Worried about the legal ramifications, the government retaliated against the farmers by hitting them with either outrageous IRS fees or by imprisoning the legal team under frivolous, non-related charges. When the farmers realized they were being unfairly targeted, they had military generals such as General Roy Swassenger sit in the courtroom to make sure the bribed judges would vote according to constitutional law. The farmers, now with a large team of knowledgeable people with the law behind them, filed a new case to claim additional damages from the fraudulent loaning activities of the Farmers Credit System. The government tried to settle, but they had already lost many cases and were now losing the appeals as well. More and more evidence was collected. According to the National Banking Act, all banks were required to register their charters with the Federal and State Bureau of Records, but none of the banks complied, allowing the legal team to sue the Farmers Credit System. Not only was the Farmers Credit System not chartered to do business with the American Banking Association, but so were other quasi-government organizations such as the Federal Housing Administration, the Department of Housing and Urban Development, and even the Federal Reserve Bank. The farmers' claim lawsuit was thrown out of court at each level, with the records purposely destroyed. So in the early 1990s, Roy Swassenger brought the case before the United States Supreme Court. Some of the content of this case is sealed from public eyes, but most of it can be viewed today. Almost unanimously, the U.S. Supreme Court justices ruled that the farmers' union claims were indeed valid. Therefore, all property foreclosed by the Farmers Credit System was illegal, and those who were foreclosed on would have to receive damages.
Right now, one of the things that has really been bothering me is I have been, to the best of my ability, and I'm no realtor, I don't know hardly anything about this stuff. I'm a healthcare worker. I don't study this stuff, but I've been, for the last 2 years, having to educate myself regarding how I might be able to keep my home because I've been unemployed for almost a year now. So our income has significantly been depleted. A great deal of stress in the home and a lot of things to be considered. I'm not going to be able to do what a lawyer does here, but I am becoming more and more informed by like what I'm trying to do here for you right now, direct your attention towards information that can help you save your home. One of the ways we've been going about doing that is trying to get what they call mortgage reduction or modification through the lender that is servicing my loan right now. I have attempted to do this now probably 6 times and getting frustrated to the point that I'm ready to pull my hair out. But each time I've either been denied because they say I don't, quote unquote, fit into their guidelines. Well, excuse me, I've lost a significant amount of income. The need is definitely there, but they're saying I'm not presenting it correctly. So what did I do? I went and hired a lawyer, a law firm that specializes in this type of legality, financial problem. And they've got about 84 or 85% success rate. That's why I decided to use them. I won't mention their name here until they will give me permission to do so. But point is, you have to fit into certain guidelines. The current program that we're trying to work on is the HAMP program, Homes Affordable Program that's supported by Obama. Well, here's what's happening. This is what has come out of it so far. It seems to me, from what I have experienced, that the bank is more interested in getting somebody else to come in here and move into my home and get a tremendously better deal than what I have right now currently. They'd rather have that person come in, purchase this home, than have given me the same opportunity. All right, they won't reduce my interest rate. They won't reduce my principal balance, which is significantly higher than the current property value, as the county has already assessed it. But they will give that to the person who purchases a foreclosed home, okay, or a short sale, so to speak. Why, I ask, doesn't the bank give the people that are already in the home, give them the same deal that they would give somebody that would purchase the short sale or foreclosure? What is the logic in that? You're booting a family out of their home so you can put somebody else in there, essentially doing what the people that are already living there now are asking for. Why can they not do that? Well, it goes in a bit deeper when you realize what is being done with your mortgage loan if it has been sold from the original banking institution that provided you your original loan. What they will do is they will sell these loans in groups called, what do they call that, Peyton?
Derivatives?
Derivatives. Basically what they do is they group your loan with a bunch of others and sell them to investors for whatever they value the interest rate and income that comes off of that. Well,
Derivatives bet on whether or not you're going to be able to pay it.
yeah, and how long the investment will last. Well, these are 30-year investments, generally most of them. But point being is you have to ask yourself the question, does the investor have the right to collect on your mortgage payment when you made an original contract with another banking institution who, by the way, is the one who sold the rights to receive your payments, sold it to another investor? Well, there's a bit of controversy there. And it all comes out of documentation, and it goes even deeper than that. The bank has never produced any consideration, and you need to look that up and listen to about it on Zeitgeist. They're very good at describing what consideration is and how the banks have sidestepped it. All right.
And you'll explain that in a later video.
Yes, and we will go into further detail on further videos that come up. I'm disgusted, literally disgusted, finding out information that would literally destroy the banking system. It would, if the information got out.